Hi, we are from Group Bunga. So today we will talk about the bank reconciliation, which is dealing with bank overdraft. So this is our group members and I would like to introduce myself. Hi, my name is Nur Izzah Badrina.
My name is Nur Fakra Izzati Muhammad Fauzi.
My name is Nurshas Nashira.
My name is Vishalni Katigisu.
What is bank reconciliation? So bank recon is a process to compare your company bank statement with the cash book by itself to ensure all the transactions are accounted for. So why it's important? The first one is to unrecorded transactions such as checks that have been written but not yet recorded in the bank statement or in the cash book by itself. The second one is a recording error, which means we mistakenly recorded the amount. And the third one is deposit that have been made but in the bank statement it has not been clear yet.
Basically, one is overdraft. An overdraft occurs when you spend or withdraw more money from your bank account and resulting in a negative balance. Next, dealing with overdraft involves managing your bank account to ensure that you don't spend more money than you have available. There are some reasons why overdraft happen. Number one is insufficient fund. The most straightforward reason for an overdraft is when the account holder tries to make a payment or withdrawal that exceeds the available balance in their account. This can happen due to oversight or mismanagement of fund. Moreover, if the organization can't collect their money from account receivable or sales, bank overdraft can occur. Second one is unclear deposit. Sometimes there might be a delay between the time a transaction is initiated and when it is officially processed and deduct from the account balance. If the account holder is not aware of the spending transaction, there might be a bank overdraft. The third one is unexpected expenses. Unexpected expenses they mean by emergency or sudden expenses such as medical bills or car repairs can lead to overdraft if the account holder does not have sufficient fund to cover these costs. Last one is lack of budgeting. If the management didn't have a clear budget or financial planning, this can lead to overspending and financial mismanagement.
So now we will move on to the question 1. So I would like you to understand what the question really is and what the question really means. So, Syarikat Sejati Berhad has received bank statement for October 2022. Cash book and bank statement for the month of October 2022 are shown below. So, this is our question. Next, we will need to compare the debit item in the cash book with the credit item in the bank statements. Also, we need to compare the credit item in the cash book with the debit items in bank statement.
Look at our first item, which is check received on 28 October 2022 was written by the bank. On the given debit side of cash book, 28 October referred to Kejorain, means that check that we received from Kejorain was written by the bank. For this situation, the treatment is on updated cash book, Kejorain should be on credit side RM 1789. Next, we move to second item, which check issue number 354785 on the given cash book debit side Nora. Check issue should be recorded on credit side, but in this case, Syarikat Sejati has been debited from the cash book. So the treatment is we should credit Nora on updated cash book with double amount from the original amount, which is RM 676. This is because we wrongly increased RM 338 on our business. First minus 338 ringgit is equal to 0. Then we credit it on the updated cash book, which is we minus another 338 ringgit. So the total adjusted amount is minus 676 ringgit. Last item is check 354781 is wrongly recorded in the cash book. Check number 354781 refer to 4 October Manis Madu Berhad 540 ringgit. Compared to bank statement given, on 7 October debit RM 504. We have over-record on credit side, means that we overpay to Manis Madu Berhad RM 36. The treatment is we should debit RM 336 into updated cash book. On debit side of updated cash book, We add left item from credit side of bank statement. Same goes to credit side of updated cash book. We add left item from debit side of given bank statement. For bank reconciliation, we put ending balance of updated cash book as overdraft as per updated cash book. Then, add unpresented check from credit side of given cash book and less out the outstanding check from debit side and get balance as per bank statement. The amount must be equal to ending balance from given bank statement.
Move on to question 2.
So this is the question for question 2. This is the bank statement and this is for the cash book. So for the first item, the bookkeeper has incorrectly credited a check received from Zuma Enterprise. As we can see, the wrong one is on the cash book. So Zuma Enterprise on the 3rd March 2030 are having an error, so we have to adjust this on the cash book. And then for the second item, Ben confirmed that the check number actually doesn't belong to Setia. So what we have to do is we have to recon on the, or we have to adjust on the bank recon. And then for the third item is check for that number have been deposited on 10 March where 550 was mistakenly recorded as 500. So we have to do the adjustment on the cash book. So for the first item on the adjusted cash book, we have incorrectly credit the check. So to make it 0 on the credit side, we have to plus 2030 and we have to plus another 2030 because on the debit side we have to add the amount. So the amount would be total 4060. For the third item also we have to adjust on the cash book as we incorrectly or we mistakenly recorded. So we just record for 500, we less 50 ringgit, so we have add another 50 ringgit, but it should be on the credit side because that one is actually mistakenly on the credit side of cash book. So for the second item, we have to adjust on the bank recon because 5,000 is not belong to Setia, so it was mistakenly on the bank statement by itself. So we have to add 5,000 because if we want to minus the amount, then we should add the amount, right? So that is why we have to add on the deposit in transit on the bank recon.
For comparison part, question 1, we talk about return check received. We have record on debit side as check received, but bank returned the check, so we have to minus it back as credit it on cash book. For question 2, bank statement wrongly record a check that does not belong to our business, so we have to add in bank reconciliation after balance as per updated cash book. Next, wrongly recorded on debit side. Check issue has been debited instead of credit on cash book, so we have to credit adjusted amount on updated cash book. When check received wrongly credited on cash book, so we have to update cash book by debit adjusted amount of the check received. Third comparison, over recorded on credit side should be treated by debit the adjusted amount on updated cash book, and under recorded on credit side should be credit adjusted amount on updated cash book. Lastly, treatment on question 1 got an overdraft ending balance in updated cash book, but in question 2, ending balance updated cash book is on credit side, which means that balance BD is on debit side. The differ is between transaction that we have been recorded in updated cash book, which determine whether ending balance is on debit or credit side.
So we already reached the conclusion. In conclusion, reconciling a bank statement and cash book that is overdrawn is done in the same way, remembering that money coming in will make the balance smaller. That's all from us. Thank you.